You guys know who I am. I'm going to ask each of my panelists to do a brief introduction of who they are, because they'll do a better job than I ever will. And so I'm going to start with Rafa here on my left.
Thank you, Andrew. Hi, guys. My name is Raphael. I'm the co-founder and CEO of auxmoney. auxmoney is a consumer lender, marketplace lender in Germany. We focus entirely on consumers. What we do well is that we give consumers a great user experience in terms of onboarding and really getting access to credit. And why the model works particularly well for us is that we don't compete with banks. So we really go after customers that are for banks too expensive to lend to, or banks have not lent to these demographics in the past. So that's, I think, important for every fintech to find really a unique spot, and that's what we do, and that's why the model works well.
Hi, so my name is Anil Stocker, and I co-founded a company called MarketFinance. We used to be called Market Invoice. We're a business finance lender, and so we're helping small businesses. We started off by helping them with invoice finance. We did that for many years, and now we are offering more products. So we can offer lending against revenue, future revenue, invoices, and also loans. So we want to be really a one-stop shop to help small businesses with the working capital they need to get up off the ground, expand, and grow their business. So since we've launched back in 2012, we've done over 2.5 billion of funding through the platform to help thousands of businesses in the UK. Many of them export around the world. We're a team of about 150 in London. And we've also partnered with banks, so we have some big distribution partnerships with the likes of Barclays in the UK. So we think that collaborating with other partners, be that banks or accounting or insurance, is a good way to embed our technology, embed our lending services within other networks.
Thank you.
Hello, everyone. I am Olivier, CEO and founder at October. We have something in common with Anil. In fact, we decided to change the name of our company. We used to be known as Lendix, and we started as Lendix, and we are now called October for 1 year. We are a lending marketplace dedicated to small and medium-sized enterprises. We are lending money only in continental Europe, meaning France, where we started, Spain, Italy, the Netherlands, and now in Germany. So 5 countries, 5 years. We have originated something like 400,000 euros. Lend to small enterprises, meaning loans starting at 30K up to 5 million euros, and an average loan roughly around 500,000 euros, so which is slightly bigger than let's say, the average of the market.
Excellent. So, like I said before, I think everybody knows these platforms. These are 3 of the best known online lending platforms in all of Europe, and they all have been very, very successful. Each of them, I believe, are unicorns. If they're not, well, you know, somebody said it's an aspirational thing or directional. They're all heading in the right direction right now. So when I see platforms like this, I always, you know, wonder how they became successful. I think for anybody who's in an early stage venture, you're an entrepreneur, it's really, really, really hard. And personally, in my experience, because it's a startup media company, you know, about once a quarter, I wake up and I'm like, I can't do this because I've done something totally stupid, or somebody's trying to sue me for something I've done that's stupid, and I can't, you know, I can't get over this. But then I just keep fighting and do it again. And find that the financial services industry, it's even harder, because it's a highly regulated industry. So I want to ask you guys, or start with you, Olivier. I mean, why did you do it? I mean, are you crazy? I mean, you want to start an online lending business and challenge the big banks and a highly regulated industry. I mean, are you nuts? Why?
Maybe I'm nuts, yeah, I don't know. In fact, I've always been an entrepreneur. I started my first venture when I was 26. It was a private equity fund dedicated to retail investors, so definitely crazy. It was in finance, it was dealing with SMEs, it was dealing with regulation. So when I saw this opportunity arriving in France 5 years ago, thanks to a new regulation, I thought, yeah, that's perfect business for me. It's tough. It's dealing with regulation, SMEs, finance. We are competing with big players, so let's do it. Let's do it. Be crazy. So honestly, I've always been in this industry, so it was quite obvious for me. It was maybe my midlife crisis. I was 40.
There you go.
Yeah,
It's
so
a
it was,
crisis.
let's say, let's start something new, let's start something difficult. So that was the very beginning of October.
Excellent. So you had a crisis. Anil, why?
So I guess my story is a little bit different. So I started working in 2006, and I worked for Lehman Brothers, was my first job.
Lucky
so
you.
I saw a kind of boom and bust firsthand of finance. And I was kind of working in this big tower, and there was digits on screens, and it felt very far removed from the real economy. And it felt just like there was a group of insiders who were moving money around, making themselves richer. But there was a big disconnect to the smaller the smaller businesses that employ about 60% of people in the UK are employed by these small businesses, right? Like the media companies, the PR companies, consultancies, small engineering companies. And it's really the backbone of the economy. So I think in that kind of post-crisis, when finance had lost its kind of allure and charm, and people were really questioning the model and seeing how we could democratize it or make it less inaccessible. We decided, myself and a group of people, we thought, let's play around, let's see whether we can start something. And it really started like in that vein, quite experimental. Can we connect funding to small businesses to help them grow? So we didn't realize how tough it was going to be.
You wouldn't have done it otherwise, right?
It's a really tough business because when you're lending money, you have to make sure you want money to go out, but it has to come back in a consistent way.
That's the challenge.
You not only have you got to find customers, you've got to risk score them, you've got to service them, you've got to move money around. There's definitely easier business models out there.
Yes, there are. So you're like a reformed investment banker. You had a crisis, reformed investment banker. I'm going to ask the same question of you. auxmoney. And are you going to change your name? Because these two guys did. I mean, it's like,
Not going to change the name.
Okay, all right.
Like you, I was an investment banker working for Rothschild for many years before, so there was a complete career switch. When I left Rothschild to found auxmoney at the time, people told me I'm crazy, so a bit of that as well. But we wanted to heal wrong in the market. So my co-founder, one of my two co-founders, he was an entrepreneur at the time, quite successful already, and he told me about that he was rejected outright by 3 different banks. They even didn't talk to him because he was self-employed, and they said, no, sorry, we don't lend to self-employed people. And that got us thinking, like, why is that the case? We started to really understand the industry, how banks approach lending in general, and we saw tremendous shortcomings and also unfairness, because you would say, okay, I mean, he deserves the credit. Why is he rejected from the system, the banking system? And at that point, we thought, like, how can we use technology and data to overcome these shortcomings? And that was basically the idea and what eventually became auxmoney.
Excellent. So each of your platforms is successful now. And I don't know if and how much money you're making. You don't have to tell me, but you can tell by your rate of growth, what you're achieving, what you're accomplishing. You guys really have traction. And I'm going to start with you, Anil. At what point in time did you realize that you had turned that corner where you could actually sleep through the night and without waking up, just worried about what's going to happen? Was there a point in time where you said, okay, we're making this right now, I've got it?
So there were lots of challenges along the way. So I would say that each phase is a different challenge. But in the early days, what surprised us was that when we opened our doors for business, we thought it was going to be very hard to attract the investors to put money into the platform, but very easy to get the borrowers. But actually, when you're starting a fintech brand or financial brand, you have to build a lot of trust, because the businesses that are coming to us, they were relying on us to get cash flow, to pay their staff, pay their suppliers. So we had to do a lot of work to kind of make our brand feel stable and trustworthy, so that businesses would interact with us. Because in our product, Invoice Finance, they were using us every week, every month. It was like we're their number one financing partner. They kind of subscribed to us.
You were the first.
And download. Well, we would be their main funding provider. Yeah. So for us, it was to build that brand, the trust. And I think when we started to realize it was when I went to visit some customers, which I love doing. It's my favorite thing that I love doing, is to go and visit them. And they would kind of tell me, the money that we've been downloading from you guys has enabled us to do this, hire these people, expand. That's when I realized that what we were doing was very powerful for the customer. And when you delight the customer, That's I think when you have a business.
So you're saying that you realized that you're turning the corner when you saw that trust emerging.
When they could use us to actually fulfill on their business plan. And
they looked at your brand and said, "These guys, I know that they will work." So you established that foundation of trust. Okay, Olivier.
First, I think I'm too paranoid to think I'm arrived somewhere. So I never sleep well. When you're lending money to SMEs, you have many reasons of being paranoid, starting by default, starting by fraud, starting by a lot of issues we may face in our daily life. So first thing. Then back to early days, as you mentioned, when we launched in France, of course, we were not the only platform to have this idea. Just to give you a very quick figure, when we decided to launch in October 2014, we were roughly 60 players in France. So everyone was trying to grab a portion of this market. So it was, we had let's say a fierce competition, but we had these very specific ideas saying, okay, it's not a peer-to-peer business. It's more, lending marketplace, we were discussing it earlier. So since day one, we understood that when you're running a marketplace, you have a chicken and eggs problem, meaning you need to match both lenders and borrowers, and that's very challenging. And since day one, we decided to solve at least one of the two issues we had, meaning finding lenders. And that's the reason why, since day one, we decided not only to deal with retail investors, but also to deal with insured money, with insured investors. And that was the key, meaning that we were, since 5 years, we are fully focused on finding borrowers, which is a relief. It's tough enough to find, let's say, high-quality borrowers, not to find both high-quality lenders and high-quality borrowers. So this mix of retail investors and insured investors, I think that's the reason why we are today number one in France and amongst the, let's say, as you mentioned it, let's say successful players in continental Europe, is because we have been good enough to solve this issue. But you have many other issues to solve on your way. So
right.
That's and to mention what, but I guess we will discuss it later. But we live in a very specific environment today with very, very low rate. So you have to deal with it too, because what lenders are currently looking for is not existing. So they are looking for yield, but yield has disappeared. So how do you create yield for your lenders in order to be able to lend enough money to borrowers? So that's the challenge that keeps me awake at night.
So you're still not sleeping through the night. All right, you're kind of like me. What about you? When did you realize you turned the corner? auxmoney.
So as a platform, you have to get both sides right. So you need to acquire, at some point you need to figure out you can acquire borrowers at a reasonable cost, because everybody can grow. The question is at what marketing cost, so how much does that cost? In order to do that, you have to have a fantastic product and you need to have word of mouth, otherwise it doesn't work. So people need to be really excited about the product they use, and once that works and you have your NPS up, then suddenly you find that you can acquire customers at an attractive cost, and they recommend to other people. So that's one part of the equation. And then the other side, the lending side, at the beginning it's tough. So you start the business, there's nothing. auxmoney, we go after demographic that the banks cannot or don't serve. So it's a particular challenge. You can't just acquire or hire smart people in the market which bring all the expertise. So we had to build at our scratch. So at the beginning, clearly the challenge was to hire the smartest data analytics people for them to use the data and become better and better and better. And we are now in the 5th generation of our scorecard, which really works particularly well. So in order to attract the capital to fund the borrowers, you need a track record. With the absence of a track record, that's difficult, at least in size. So what we did at the beginning, we started peer-to-peer, was people. We looked carefully about the return that they were making. But once we saw that the whole system is working, that our scorecard really achieved the return that we were predicting, then it allowed us to attract more institutional capital. Once we had the first 100 million of institutional capital, that helped us to accelerate the growth, put more data into the system, make the system even better, attract more capital. And that's exactly the beauty of the marketplace lending model, that it allows you, the way auxmoney is set up, to continuously have a more robust, better model, attract more capital. We are by now above 80% institutional capital. So that is really the source that scales well, and and that has allowed us to grow to where we are today.
So was that the hardest part of starting, is finding the borrowers? Because you don't just say, hey, borrow from me, here I am.
Day
and do
one.
Google ads, right? I mean,
That's right.
Yeah.
Day one, it's both sides. You don't have the borrowers, you don't have the lenders, because they have nothing to trust on. So you try to figure it out at the beginning. And then over time, similar to what you just said, it changes. Sometimes the borrowers is where you have enough capital committed, and you say, actually, I can now really give loans to more borrowers. And then, then at some point, the constraint is more on the lending side. So I think also going forward, that will always be on each side, but it's getting much easier if I look at where we stand today, even compared to where we stood 3 years ago.
So when you started, so you're a marketplace, so you accept retail money, plus you have institutional money. When you started, did you have the institutional money originally? So it was just...
At the very beginning.
You just turned on the lights and launched the website, and you said, come and lend and borrow.
Yeah.
That was hard. Okay, cool. What about you? I mean, you are a marketplace as well, right?
Yeah, so we started with a marketplace model, but we never had retail investors.
Right.
We always had large, so we started with high net worths and family offices, but now 80-90% comes from banks, asset managers. Right. So we were always more institutionally funded. And now we're a hybrid of, we have some balance sheet participation, so we also participate ourselves as well as having a marketplace. I think that's the industry has changed, whereas peer-to-peer was very popular in the beginning. I think a lot of the platforms to achieve scale needed institutional partners to stabilize access to funding and also lower the cost of funding, and also to make sure that investors understood the risks they were taking, because there was that's the number one fear of regulators, is that investors don't know what they're investing in, what the risks are associated with that.
Well, so since you bring up regulations, I want to talk about regulations, which is a topic that I love. I have a genetic flaw where I really enjoy reading about regulations and policy. So I think I'm well matched for this industry. So Olivier, you entered the industry when some of the regulations were changing in France, right? There's some new laws enacted. How's that impacted your platform, your service, and what you're doing? And the laws are going to change some more in Europe as well, correct?
Yeah. In fact, if you dislike regulation, don't come at October, because we're regulated in France by ACPR and AMF as a management company. We're regulated in Spain by CNMV, in Italy by Consob, in the Netherlands by AFM. And in Germany, we have to comply with BaFin, even if we are not regulated by BaFin. So that's just a nightmare. You have to satisfy 6 regulators while we are looking to be in 5 countries. So that's pretty challenging. On the institutional side, we are very lucky. We are very lucky because you have a unique regulation at the European level called European Long-Term Investment Fund. I guess you may know this regulation. So it's quite easy for us. We have a single fund for institutional investors lending anywhere in Europe, very easily, regulated by the French authority, but then very easy when we want to lend in Germany. Even in Germany with BaFin, it's quite easy. We do like that. So that's pretty convenient. On the contrary, on the retail side, that's just a nightmare. That's a nightmare not only on the regulation side, but also on the tax side.
Okay.
So just imagine on October you can be Spanish, lend money to Dutch companies, or being French and lending money to an Italian company. And we have to take care of everything, regulation, tax, and languages, of course.
So the joys of a single market, right?
So, and that's why we are pretty happy to see that a European regulation should emerge next year. It has been announced, as you may have seen, in December last year. So that's something very good, because it means that we have only one set of criteria, one set of rules at the European level. So it will help us a lot, definitely.
So that'll be big.
Yeah, it will be big. It will make things easier. And it's not only about setting up operation in one country. It's also about being regulated and being controlled by the regulator. So having only one set of rules makes your life definitely easier. because we may be asked something by the Spanish regulator, which is completely different from the French regulator. So who should you follow, the French or the Spanish guy? So that may be very challenging. And unfortunately, Europe was not existing on a regulation standpoint for a specific industry. So now it's happening, and that's very good news.
Excellent. So coming from the United States, I look at the regulatory environment from kind of a North American perspective, and I think that the U.S. is an absolute mess. There's a dozen of federal agencies that touch financial services, and then you have to deal with each and every 50 states. It's kind of a train wreck that people are terrified of fixing, even though they know the problem is there because the politics are bad. Then I look at the UK, and I'm like, you guys have to deal with one regulator most of the time. I'm like, gee, what a great idea. So, you know, I am envious of the regulatory environment in the UK and the relationship that you all have, which we were talking about last night. How is it working with the UK regulators, and how has that evolved over time?
So I think, I mean, I'm biased, but I think London and UK is the best place to launch a fintech globally. I think that from the very beginning, this was back in 2010, 2011,
right.
The FCA, the FSA back then was very proactive in encouraging innovation. They had an innovation center. They would meet with a lot of fintechs. I remember going to the Treasury because someone was saying that we might fall foul of some regulation, and they were like, no, just continue doing your work. We're not here to regulate you. So we don't want to stifle innovation. So they also with banking, bank licenses, all the digital banks that have emerged from London. There was a period where it became quite straightforward to go and get a banking license. We don't have one, but others went, like bigger, the big digital banks have now got banking licenses. So they were very proactive. It was really a great environment to launch fintech in London. That's why it became the center. It's slightly changing now. I think there's some feeling that some parts of it needs to have a little bit more oversight.
For the online lending sector.
For like the retail-based platforms.
Right, yes.
So the FCA are looking, they do look more favorably to platforms that are institutionally funded rather than retail. There was a little bit of, clamp down on some of these mini bonds or these kind of very high-risk lending products that were being sold to retail investors. But overall, super benign environment. I think it will continue to be very good because now the new government also wants to promote fintech. Every government wants to promote fintech in the UK.
Absolutely. That's one thing I wish the UK could export to the United States. I really wish we could fix the problem there. What about BaFin? I look at BaFin, again, I'm an outsider looking in, and I think it has a reputation of being a very conservative agency, but yet you're starting to see glimmers of innovation support. Am I mistaken, or?
I think the benefit in Germany is that there's one regulator, unlike
yes.
the US, so that's clearly positive. And another positive, it's clearly laid out what you can do and what you cannot do. But I would say it's not as innovation friendly as in the UK. For example, to do lending in Germany, you need a banking license. So what we do is we partner with a bank. I think that's the way that you do it. So we are not regulated by BaFin, but our partner bank is.
So it's regulatory arbitrage.
So it's not arbitrage. So they fulfill certain regulatory requirements,
okay.
Which is an additional cost to us, which in the UK is not necessary, for example. And I think apart from regulation, there are a lot of, if we look at the framework, what makes companies successful in various countries, it's also about, for example, employee incentivization. To be successful, I think in that regard, we do compete with each other. Not only we, but every startup for the best talents and, like employee stock option program, how they are treated tax-wise in various countries make a big difference. Some countries it's more advantageous, in other countries it isn't. And I think the countries that have, a worse tax situation, of which Germany, for example, is one, then that gives you an advantage at some point when you hire international talent, a specific talent that are looking which company to join. And I think that's another element when talking about regulation. We also have to look at the broader framework.
Okay, did you want to add something, Olivier?
Yeah, maybe when you were mentioning we may need a fronting bank, that's the name of the fronting bank, meaning a bank lending on your behalf for a few seconds before you realize the loan. That's to explain it very shortly.
Yeah.
But
So-
the fact is that, seen from my standpoint, meaning operating in these 5 countries, BaFin is the less friendly regulator, meaning that, for example, just to give you an idea, in France, Spain, Italy, and the Netherlands, you do not need a fronting bank. And even in Germany, for example, for us in Germany, it's impossible to lend with retail investors. But for insurance money, we do not need a fronting bank thanks to the LTIF model, meaning the European Long-Term Investment Funds avoid us to have a fronting bank, which is less expensive, as you mentioned, because when you want to go through a fronting bank, of course, you have to pay a fee to the fronting bank to operate the loan for you.
That's quite interesting. In our industry, when you raise capital, hundreds of millions from institutional investors, then there is a big element of being regulated because, I mean, these are all highly regulated companies, investors, and the demand that they impose upon you to meet their requirements, basically flows through to all of us. Although we are not specifically regulated, the nature of the business model has many elements of it.
Yeah, okay, so, all right, let me shift gears here a little bit. You guys are successful. You figured out how to manage the regulatory environment. You're seeing growth. The economy is going gangbusters for now. So who's the enemy here? Who are you fighting against? Is it yourself? We saw the enemy and it's us, sort of thing. Is it the politicians who inevitably try and find a way to bollocks things up? Is it the banks? That are frenemies? I mean, who's the enemy here? We'll start with you, Rafa.
So for auxmoney, I would say there is no real enemy, and that goes
I don't
back
believe
to what.
you. There's always somebody who's trying to get you.
I explain. Well, there's healthy competition in some areas, but because we go after market that the banks don't serve, so the banks are not really the competition. I mean, the banks, there is some overlap. And then there is healthy competition there. But we cooperate with banks. So many banks choose to partner with auxmoney and extend their credit offering by sending the leads to us. So with banks, we cooperate more than we compete with each other. So I think when it comes to attracting talent, which is, I'm sure, top of mind for all of us, that is something that we think about a lot, and there we compete with the entire ecosystem in Germany and potentially even outside of Germany. But I think in terms of lender, we have to acquire lending capital. There we do compete with alternative fixed income asset class, and that can be other fintechs, but that can also be high yield bonds and other fixed income. So there is competition, but not directly in the business model as we operate it.
Okay, so Neil,
look, I think so. We focused on the SME, small business segment in the UK, which has been a segment that's been ignored by the banks. Why? Because it's really tough, actually.
Right.
You need to have the technology. You need to have online systems, online applications. You need to have a risk model that's slightly different. You can't just throw people at the problem because otherwise it's not economic. So there's a reason why banks have ignored this. So we kind of view this as a place where everyone can win, right? The triple win. The triple win is that we can come in, we can partner with banks. So we partnered with Barclays. They didn't have a product for small businesses on the invoice finance side. We've partnered with them. They now offer our product to their 1 million customers in the UK. We onboard them, we risk them, we prepare, and then Barclays also funds. So not only do we benefit because we're getting more distribution, Barclays benefits because they offer a product to these customers who were not borrowing from them, and they also deploy money. And the business benefits because it's getting access to funding. So we like to think of ourselves as, we're adding to the ecosystem here. We're not really fighting. We're not trying to fight or take away share. Yes, of course, on the edges we compete. We compete with some regional banks in the UK. We compete with other factoring invoice finance companies. But ultimately, there are so many businesses that have put off their growth plans or not achieved what they wanted to achieve because they couldn't access funding, right? So that's what we're trying to solve here. So it's really positive, and we want to partner with people in the ecosystem to generate these mutual wins for everyone. That's what we want.
So it sounds like everybody's getting along. The banks are happy. You're happy. The businesses are happy. Everything
Well,
is
in the
good.
UK, we needed much more competition. There was only 4 or 5 banks that
That's
controlled
true.
90% of the market, and they were not offering products or solutions for small businesses. So there was a clear gap in the market, which is why you had so many players launch there.
Okay, well, Olivier, maybe it's the economy, because, I mean, things are great now, everybody's happy, but at some point in the future, right, 5, 10, 20 years from now, there's going to be an economic downturn, right? It's inevitable. We just don't know when. I'm sure it will surprise us when it hits. Is that the big risk?
Yeah, but I would like to answer to enemies too,
Okay.
because
Yeah.
I think that's a real question. And economic downturn may be my enemy too, but I have 2 enemies. The first one is habits. The second one is low rates. Habits, why? Because in this room, everybody knows about lending marketplaces. But just try it today when you will have lunch at the Vaudeville restaurant outside of Palais Brongniart and ask the guy if he knows about lending marketplaces. The answer will be no. And if you ask, where will you go if you need money? We'll say the bank. So we have to evangelize a lot. And only after 5 years in France, honestly, nobody knows about what we do. So that's the main challenge we have, how to change habits. How to change habits for entrepreneurs who are not reading Les Echos or Le Monde every day. We are not reading blogs about Fintech. We are just running that daily business. So that's the first challenge for us. The second challenge, which is maybe even bigger, is that it may be linked to the economic cycle, is that we have currently very low rates. And it's very difficult. We are too expensive, honestly. The cost of a marketplace lending versus the cost of a bank is too high. So our main challenge is to decrease this cost of funding. And as soon as we will be good at decreasing this cost of funding, our business will honestly take off. That's, for me, very clear. There is a direct link between the cost of funding and the volume you do. Hopefully for us, we think we have a solution to decrease significantly this cost of funding. Stay tuned. We should announce something in 4 months. It will be a game changer for us. And that's the key, because especially if I don't know how long it will last, 1 year, 2 years, 3 years, as you mentioned.
Right.
And for sure, when it will change, it will create, let's say, a lot of default, for sure. So it will be challenging. It will be easier at some point because we'll be less expensive compared to, let's say, the traditional system when it will change, but we will experience more default as everyone in this industry.
So you said you have a solution to lower your costs. You want to share what it is? Or is it a secret?
You're right.
That's
That's a secret.
right.
But
All
stay tuned, in 4 months I will disclose it.
All right.
sorry
Yeah,
to be so secret.
I think that the point that was raised is actually a really good one, which is the lack of awareness outside the fintech bubble is huge. And when we travel outside London, you realize just how low awareness is. And I think there was some survey that they did, and like only about 2% of business owners are aware that there is an alternative to the bank.
And you're lucky you say outside London, even inside Paris, it's not so well known.
You mentioned economic downturn. Will it come in 5, 10, 20 years? I think it has already started. If you look at early indicators, industry production, etc., it's going down already. And you can see increasing defaults on some of the SME platforms already happening. So I think it's not something in the distant future. I think we are already maybe 9 to 12 months into a downturn. A mild one, but we are in a downturn scenario. So I think it's a fantastic and huge opportunity for all of us as the downturn continues.
So it's a good thing.
It's a good thing. It's a good thing.
Well,
It's a good thing. I think it's a tremendous opportunity. The platforms will be able to learn and adjust and improve their business model. Not a business model, but their scoring model and their algorithm. The companies will come out of that stronger, for sure. And on the business side, it creates a tremendous opportunity because banks, as in all historic downturns, just become more restrictive. So even as we become more restrictive on the lower end, net, it's a huge gain. And that's a big opportunity. And I think many of these businesses like Zopa were created after the economic downturn or crisis because there was an opportunity. And we will be there and benefit from that hugely. So, we run every institutional investors. That's the number one question on their mind. We run scenarios, simulations, what happens if unemployment rate increases. There's good data about that. We have prepared in our risk model at auxmoney for that scenario as good as we can. But I think net it will be a strong positive for us at auxmoney, but I think for most of the platforms.
So I like that. You're very positive. You know, economy's good, economy's bad. You guys are going to do great, right? It's like, you know, rosy future here. So we only have a short amount of time. Scaling. How do you guys continue to scale? I know that October, you guys continue to target European countries and you set up shop, and you've actually done a really good job. There's been some other platforms that we're not going to mention any names that have entered countries and then decided that it didn't work so well for them. So kudos to you. You've been successful in some of these countries. Is that your model going forward? Do you continue to just step stones from country to country? Eventually, do you cross the channel and invade the UK? God forbid you would try to enter the United States, but that'd be really cool if you did. I mean, how do you scale?
No, the fact is that we really want to stick to the Eurozone. So we stay in continental Europe. We won't go in the UK. We won't go in the US or in Asia. So we stick to the European zone, the Eurozone. First thing, we're already in 5 countries. With these 5 countries, it represents roughly 80% of the European GDP. So we want to stick to this zone first. And our main challenge, and how will we grow, how will we scale, it's by decreasing the cost of funding, as mentioned before. So that's my only focus currently, is decreasing the cost of funding before expanding, before launching new product, before everything. So that's how I decrease my cost of funding in order to attract more high-quality borrowers and to, let's say, increase dramatically the origination. That's my only focus for 2020.
Excellent. Very quickly, you get 10 seconds. How are you guys going to scale?
Yeah, so our strategy is multi-product. So rather than going multi-geography, we want to launch more products. So we've already got 2 or 3 ways of borrowing money from us. We want to add more in the future. So we'll be more UK focused with more products, probably, go deeper, and then also more partnerships, more strategic partnerships with banks or accounting providers to improve distribution.
Crossing the channel or not?
Potentially through partners, but at the moment more focused on more products development.
Excellent. auxmoney.
We can go 20 times in Germany alone in the niche that we are in. So continue to execute well is one thing, but I think there's a big opportunity to add additional product to capture some of the yield that our investors are making, because the return is great that our institutional investors and private investors are making on the platform. So there's a lot to do for the years to come. Internationalization, yes, as well, but not in 2020.
All right, excellent. We're out of time. Please give a big round of applause to the excellent panelists here, and thank you.